All right. I think I'm just going to start with the introductions, and while people are still logging in. So I just want to say welcome to everybody, everyone, our panelists and the delegates who are busy joining us, and welcome to our webinar on Nigeria's consumer sector, on looking at the prospects and for growth and the way forward. So just wanted to check. Okay. All right. So I think that just by way of introduction, the Nigeria is for investors is a numbers game. Many people invest because of the size of that market, but it's not an easy market, as people often point out. And it's been going through quite turbulent times of late. I know everybody has with COVID, but Nigeria has went into COVID with already quite a few challenges in this regard. And we've seen inflation go very high, up to around 20%, particularly driven by food inflation, border closures, making basic goods quite scarce and pushing up inflation as well, the devaluation of the currency and the cost of imports, and the difficulty of getting imports in, and the forex shortages, and which a lot of companies have really battled with of late. And that is also a consequence of COVID, with the oil price being so low, and the knock-on of an earlier recession in Nigeria. And then, of course, the COVID impact. I think everybody knows what those issues are: supply chain, market contraction, etc. And of course, in Nigeria, it has been a lot less severe than in South Africa, but mostly in Lagos as the commercial hub. This has exacerbated the slow growth of the country generally. And in line with this, and not necessarily related to it, is the withdrawal of South African retailers, Shoprite, Massmart, Truworth, Mr. Price. So that has been over the past year or so, that has been a big kind of effect on the South African engagement in Nigeria. Not only because of the size of the businesses, but really because of the symbolic issue around that. It just makes it look like, where is this relationship going? And of course, for us as the SA Nigeria Business Chamber, that is an issue. And there's many different reasons for this. It's not always about Nigeria itself. It's often about other issues, including opportunities in South Africa itself. Shoprite is doing a big expansion here, or problems and other problems at home. But anyway, as things go, the inflation has gone down quite a lot over the past couple of months. COVID seems to be in retreat. Growth is starting to pick up. So what we wanted to do today is to actually look at this critical sector, and talk to our distinguished panel to examine some of the issues and talk about what is likely going forward. So I'm just going to introduce the panel, and then we will move on to the questions. So we have PRENITA PAHALADH, the manager of Global Markets Standard Bank Group. Her colleague Olu DELANO, head of client coverage with Stanbic IBTC in Nigeria, may or may not join us. It's possible that he's been called off to an urgent job. But we also have Fola Abimbola, who's the senior consumer analyst at Stanbic IBTC. And we have SUN-BASORUM, CEO of FoodCo. FoodCo is a diversified consumer goods company with supermarkets, quick service restaurants, and manufacturing. Its operations are focused in southwest Nigeria, which those who know the country is around the Lagos area and the commercial hub of Nigeria. And Derek Roper, who's the MD of Navarre Equity Partners, they have developed a number of modern shopping malls in Lagos and Abuja, and he's going to look at some of the issues there, as well as a comment on how they are going to manage without a lot of these quite large South African tenants. And last but not least, myself, for those who don't know me already, I'm DIANNA Games, and I'm the CEO of the South Africa Nigeria Business Chamber. The chamber was formed in 2005 to facilitate business and information flows between the countries. We're a membership-based organization with companies from South Africa and Nigeria, and we do a lot of connecting across this bilateral axis, including regular events. We just did one recently on tax in Africa post-COVID and the likely outcomes on the tax front, and previously one on export requirements to Nigeria. So I think that, the relationship is not always easy, as I think anyone who's engaged knows, but I think that never diminishes the size of the opportunity between the countries. So we persist with this. And in fact, our President Cyril Ramaphosa, is on a state visit to Nigeria at the end of this month. So that is always a good opportunity to reset the relationship and deal with some of the issues. So please look for more information on our website. I don't want to go into too much detail here. Just to mention that we will do the Q&A. Any questions you have, please go onto the chat line. Please put up questions as we go along, and I will have a look at those after the first round of speakers. So I just want to welcome everybody again who's on the line, and hopefully the numbers will build up as we go along. So in the first round of questions, I just wanted to, I think Olu has not joined us. No, I don't see him. So PRENITA, you're on your own here, and I'm sure quite willing and able to deal with that. And just wonder, could you, from the Standard Bank point of view, give us a macroeconomic view of this consumer segment and some of the drivers and some of the trends in the sort of post-COVID era? So over to you, if you could just put your slides up.
Thank you. Thank you so much for this opportunity. Just let me know as soon as you can see my slides. There.
That's great, thanks.
Thank you. So I think it's very important for us just to take a pause. Thank you so much, Diana, for actually teeing up what we've seen in Nigeria over the past 18 to 20 months. And I think when we're looking at the Nigeria economy, it's really good for us just to take a pause and actually take a helicopter view on what exactly are we referring to and the size of the prize. So just looking at Nigeria, I mean, it's Africa's largest economy. From a GDP perspective, it actually contributes 19%, followed by Egypt at 17% and South Africa at 11%. In numbers terms, from a nominal GDP in 2020, it meant that it delivered $375 billion of nominal GDP growth and forecasted to grow at 3.1% for 2021. As you've alluded, I mean, the size of the prize in Nigeria is just attractive because of the population size. I mean, it's north of 200 million people, with 11 cities with a population of more than 1 million people. And what makes this particular country so attractive to the consumer segment is the favorable demographic, with 77% of the population under the age of 35. I think it's also very important just to understand how the different sectors as well contribute to Nigeria's GDP. You have agriculture, who's seen significant booms recently, contributing just under 25% of the GDP, industries at just under 22%, and services on the residual. As we all know, Nigeria is predominantly managed by the oil and gas segment, and that contributes for 90% of the exports and 80% of the federal government revenue. I've decided to also just add a lens on the agriculture sector. And the reason for this is, from a long-term perspective, it will have ripple-on effects onto the consumer. When you look at the abundance of land and productivity of the land that is available in Nigeria, I mean, there's less than 50% that's currently in use. And what makes Nigeria quite unique is that you have a labor force that is willing and able in order to support the growth in this particular segment. And recently, we've seen the government as well move significant amounts of their policy reforms towards boosting this particular segment in terms of offering, farmers improved guidance on irrigation and machinery and crop varieties, being able to assist with, trying to reduce dependence on the imports and increasing your import substitutions with regard to maize, rice, as well as palm oil, and increasing the production on your export commodities, such as cashew, cocoa, as well as sesame. There's also been a credit risk guarantee that's been offered to both your institutions and investors to help de-risk their exposure to the investment in this particular sector. So the resulting impact from a long-term perspective of seeing more momentum in the agricultural sector for the consumer means increased employment. It means there's more available disposable income, and it will also help curb those high inflations that you're actually seeing through the supply chain and the resulting impacts of the devaluation of the Naira. So I just thought it would be important just to understand that contribution on the consumer. And then we're going to move on to what we've seen on the consumer over the past 18 to 20 months as a result of COVID. So on our top left, we actually have a depiction of what your daily infection rates are. And you can see, even at the peak of the pandemic, you had just over 2,000 cases of infection, which in comparison to the numbers that we've heard from the likes of the US, Europe, and even South Africa, does seem quite reined in. But we cannot believe that the consumer actually left the pandemic unscathed. And the reason for that is there's been an increase in unemployment because of all the rolling lockdowns that have actually taken place. It's been estimated that 20% of the labor force has actually been impacted because of the pandemic. And further to that, which we'll unpack in the further slides, is how the consumer behavior has actually been altered as a result of the pandemic. You've also highlighted, Diana, on the inflation narrative for Nigeria. It was something that existed pre-COVID and has just been exacerbated during this process or during this pandemic. And the drivers behind that is mainly your food inflation. It's due to your increase in insecurity in the areas where the food's actually produced. It's your logistical challenges. It's also the devaluation of the naira that actually has taken place. So quite a bit of factors that are influencing and putting the consumer that we see in Nigeria under significant amount of pressure. Bearing in mind that if you look at Nigeria's economy, it is denominated by the crude oil prices. And what you see on your top right is the average crude oil price per barrel since 2015. It's interesting to see how, or it's unsurprising to see how the graph on the top actually mirrors your Nigeria quarterly GDP performance as well, because of the huge dependency on your crude oil prices in Nigeria. And in 2020, as a result of the pandemic, we saw, the rolling lockdowns, we saw global shutdowns, and that actually resulted in the oil price actually crashing. And over the past few months, with all economies opening up and we see supply not being able to meet the demand globally, we've actually seen those prices increase quite significantly, which bodes well for the consumer in Nigeria. But at the end of the day, I think the theme is still that the consumer has been under significant amount of pressure. I mean, the forecast for unemployment rate for 2021 is expected to be over 24%. What we've seen in terms of the trends from a consumer and the way in which they spend is that they've moved away from your non-discretionary spends and less impulse buyings, because with the impact of having more unemployment, that actually reduces the amount of spending ability that an average consumer has. Previous to the pandemic, food has always been a larger portion of the consumer basket. And that has actually increased over the period of the pandemic by almost 10% since 2019, only because of the food inflation that's taken place. And you've also seen your consumers moving away to more hygiene-related products, your masks, your sanitizers, very much the themes that we've seen globally. As a result of the pandemic and the rolling lockdown measures that were actually put in place, malls also experienced a reduced footfall. In Nigeria, more than 80% of the trade occurs in the informal sector, and that saw a huge surge because of the lockdown restrictions and the restrictions in movement. You saw more people actually sourcing whatever they needed from their local informal trader. So that's an important trend that we've also noticed during the pandemic. You've also noticed that because consumers are under significant amounts of pressure, it means that they are incredibly price sensitive, which does cause to some extent their brand loyalties to actually wane. And because of their available income, they are also looking at the correct price points. And what we've seen retailers do in Nigeria is actually support the need for a smaller price point or a lower price point by reducing pack sizes of the goods that are actually produced and made available for the consumer. You've also seen your alcohol sales companies or your alcohol retailers, which are highly dependent on sales in your restaurants and bars, as well as in your clubs, move to mom and pop stores in order to try and reach the consumer. Retailers were also trying to access as well as service their consumer needs. And in order to do that, they started reaching out to online platforms. And Jumia, which is now one of the largest online marketplaces, has grown revenues phenomenally over the past 18 to 24 months. What also adds a nice dynamic to the Nigerian consumer is that the internet penetration is up to 70% in Nigeria. Most of your consumers use your mobile phones in order to access these platforms. If you look at just food and personal care over the past 18 months, they've grown by more than 60%, with fashion and beauty following shortly after by a 44% growth. So the e-commerce sector has definitely awakened and is influencing our consumers in Nigeria. It is easy, it's convenient, it is a channel that your youth actually looks to access. Very much though, as you highlighted, Diana, we've seen quite a bit of South African retailers actually divest and move away from Nigeria. And without a doubt, the increase in government intervention, the changes in the regulation that you actually see, and the speed of change in regulation in Nigeria, the FX shortages, the supply chain disruptions, as well as the logistic constraints, the dependency on the crude oil prices in Nigeria and the security concern, all do mean that it's an uneven playing field for any company that's trying to operate in Nigeria. But having said that, there's quite a bit of companies that have remained, FMCG companies that have remained in Nigeria and have been performing quite well. And we're going to run through a snapshot of that. We even have Pick n Pay that's coming through and trying a new store format in Victoria Island in Lagos. They've partnered very closely with AG Leventis. They're going to be opening up a supermarket, and it's going to be for a very selected range. It's going to be out of the malls. So it's going to be very interesting to see how that pilot actually takes off. So I think overall, from an FMCG perspective, it's very much about looking at a balanced portfolio risk view. And consumer companies will always realize that the youth of today actually anchor the growth for tomorrow. And that's what's always going to be attractive in the Nigerian context. I'm going to quickly talk through just a few case studies of some MNCs that have done phenomenally well in the Nigerian space and continue to invest. And the examples are an AB InBev since 1995, when they actually listed on the Nigerian Stock Exchange, has invested more than $400 million in the economy. And they've grown their market share as well from 13% in 2015 to 26% in 2019. And you also have the joint venture between American cereal manufacturer Kellogg, which is based in the US, along with the Tolaram Group in Singapore, that formulated or set up shop in 2015 for the Kellogg Tolaram venture. And in 2017, they actually had to extend their line in order to meet the production needs and the needs of the consumer in Nigeria. So those are some really good stories. If you go through to our FMCG companies that currently are listed and operate in Nigeria, this is the year to date or the 9 months 2021 performance in 2022. You can see your sales and your gross profits for the most part have increased by double digits, and that's more as a result of the increase in the food inflation. What's interesting is seeing the gross margin actually pull back from the previous year. And that is expected because even though food inflation has increased, which means these retailers had to take on price increases to the consumer, they could not filter the full impact of your supply chain increases to the consumer. And that's the reason the profitability has actually moved backwards. So the theme of this particular webinar is, will the consumer actually rebound? And I've got to believe that the consumer will rebound, because we're seeing the oil price actually rebound, which bodes well for the economy overall in Nigeria. I know that vaccination rollouts in terms of the daily infection rates in Nigeria does not seem to be a significant development, but nonetheless, it will support the lockdowns to actually reduce, as well as cause more openness in the economy and support any growth in the economy. And with regard to supply chain disruptions, very much as you've seen globally, corporates will adjust and there will be a new norm. So that will also be reined in. And you also find new companies that are finding spaces in order to develop new business models, like Trade Depot, that has come up with an end-to-end consumer distribution alternative or model to service your consumers. From an inflation perspective, I think the government is definitely intervening and supporting your consumers more in order to try and curb the impact of the rising energy as well as food inflation that the consumer is facing. So from a perspective of a consumer, the consumer will rebound. It's just a matter of time. There's quite a bit of influencing factors that we need to look at, as well as the e-commerce awakening. I think e-commerce, once it awakens, there's no way that you can actually put a lid on it. Just very quickly on how we see the macros and the forecasters and a few indicators for 2021 as well as 2022. Real household spending is forecasted in 1.7% year on year, and 2022 we see it at 2.4%. Consumer inflation will still be a theme, and it's very much what we're seeing globally as well. But with the different government fiscal and monetary policies that they implement, that could come down. But the forecast for 2021 is 14.6%. And for 2022, we see it rise to about 16.7%. Unemployment rates for 2021, as mentioned earlier, is seen at about forecasted at 24.5%. with the real GDP for 2021 being at 3.1% and for 2022 being at 2.4%. So I hope I've been able to provide a few broad strokes on what we're seeing at the moment with the consumer, as well as the trends that have been altered as a result of the pandemic. Thank you, Diana.
Great. Well, thank you very much for that. Very comprehensive overview. I was interested particularly to see how the companies are faring. The one thing it has to be said of Nigeria is it's resilient, and often people say resilience is a good thing because people have to cope, and economies that with many knocks actually revive. Of course, it's also a bad thing because people get to get buffeted by their governments and challenges and policies and things, and then start living past them, so they're not held to account. So I do have a double view on that particular issue. But I noticed that Coca-Cola has just announced a huge investment in Nigeria, or not a new investment, it's a sort of a reinvestment, and I think Unilever as well. So these are companies that have been in the market for a very long time, and they know how this works. It is kind of cyclical, it is up and down, but the numbers remain. And so thanks very much for giving it a quite sort of positive prognosis going forward. So we're not quite out of the woods yet. But Ade, so now a lot of the things that PRENITA has mentioned there, possibly you could touch on the move to online and some of the ways that the mitigating factors for the weakness in consumer spending over the last few months or year or so. So over to you, Ade.
Thank you, Diana. All right, so once again, my name is Ade SUN-BASORUM. I'm CEO of FoodCo, largest retail chain in the Southwest outside of Nigeria. We operate 14 locations, and we're proud to serve millions of consumer transactions out of those locations every year. So I'll just take a few minutes to share some reflections. I'll concur with exactly the same demographic trends PRENITA just shared offer some reflections of what we hear from the consumers on their perspective on how they're relating with those trends, and then wrap up with kind of our view of what it all means and how we view our business given the context. So very much like has already been established, and I think like everyone is aware, right? Nigeria continues to be a critical driver of growth on the continent. This particular chart shows consumption growth from 2020 to 2025, and the contribution of the various countries or regions in Africa to driving that growth in household consumption over that period of time. And Nigeria continues to be the largest driver of that growth, contributing 96 billion in growth or projected to contribute 96 billion in growth over that 5-year period. What I think is also important to note is that not only is Nigeria projected to continue to be a big driver of growth, the growth is expected to be quite diversified. This chart shows, it's a bit of a busy one, but it shows again those same countries from the previous page, and then it shows a variety of sectors and how much growth is expected to come from different categories. No surprise, right? Food and beverage will be the biggest driver of growth in Nigeria, given the level of income of a lot of the population and still focused on those set of basic needs. But it's also interesting to note that there's 4 other categories that are projected to deliver over $10 billion of growth over that same period. One is other consumer goods. And as a player in the space, we have seen a variety of very interesting electronics brands, furniture brands, health and beauty brands that have grown and have continued to be quite resilient even through this cycle. The next one is housing. And for anyone who's been here or who spends time here, there's an endless slew of residential developers that are consistently rolling out new properties. Certainly, there's an issue around affordable housing, but that sector is one that also continues to show real promise for growth. And hospitality and recreation is another one that here you can see is expected to post $10 billion of growth of that period, because consumers continue to look for opportunities to relax, to engage, to socialize, and the diversity and richness of opportunities that they have in that space honestly is still quite modest. So it's no surprise that that's another sector that continues to offer sizable amounts of growth going into the future. But like PRENITA had said, right, it's certainly been a challenging time for the country and for consumers. There's no doubt about it. And this chart just lays out a few metrics to highlight that. I think we all know inflation has been high, but very much like she had also highlighted, food inflation has also been quite significant, and it has accelerated significantly over the last year. And this particular chart shows what's happened to the price of local rice over the last year. It's up almost 50%. But whether you take tomatoes, whether you take gari, which is dried cassava, there are multiple food groups that would show you the same sort of chart that have shown a very significant increase in price over this time period, which clearly puts pressure on consumers. But I think it's also important to highlight that even with this climate, there are a variety of consumer-based businesses that have continued to excel, continue to grow, continue to drive profitability, even in this climate. In the heat of COVID, to share from kind of our perspective, in the heat of the COVID pandemic in the middle of 2020, where the lockdowns were rolled out, there was a high level of uncertainty as to the rate of growth of the infection. We saw a contraction in our business of low single digits as compared to growing multiple digits that we typically forecast. But we were quite grateful to see that pass after just about 2 quarters. So from the fourth quarter of 2020, we saw the business return solidly to growth. We saw recovery already start in the third quarter, but by the fourth quarter, we had seen growth return to the sort of levels that we expect, and we've been able to see the business continue to grow at multiple times inflation, as it done in the past, as it did through the second half of last year, and as it's also done this year, which for us is an indication that says, look, even in the midst of all of the challenge, even in the midst of the complex environment, there are opportunities to still find a way to create and grow profitable business. This particular chart, for me, I like, because it continues to remind me of what that 200 million population in Nigeria means in our sector. And this chart just takes a different perspective on what is the current level of penetration for modern retail. I think we all know the metrics. Modern retail in Nigeria is less than 10%. Some metrics still even have it in single digits. But this chart tries to show that by comparing it to the level of penetration in other regional markets, and just takes the market leaders in each of those segments and say exactly how many stores do they have per million citizens. And I think no surprise, I mean, South Africa is much further along than the other 2 players here. But even when compared to Kenya, Nigeria's penetration of modern retail by this metric is still only about 10% of what Kenya has achieved. So it points for us, right? What does this mean to us? So what this means to us is, look, although we're not seeing the sort of economic growth that we frankly had anticipated or thought we would see 10 years ago, although the consumers are under more pressure than we are comfortable with or they're comfortable with, there continues to be an unmet set of needs that creates opportunity even within the current cycle. And when you speak with consumers, you get very much that same sense. This chart is something I pulled from a set of recent focus groups that we ran to understand how they were feeling, how they were thinking about the climate, what sort of things they were appreciating in the sector, and where they wanted the sector to move differently. And this particular chart was a question to them about what are the things that are working for them about the way they're engaging with modern retail today, and what are some of the concerns that they have with the current set of offerings that they have. And for me, it highlights a few things that, frankly, some of us might take for granted, but for the average consumer, it's a set of things that provide real value, that drives their behavior and drives how they spend. They continue to talk about how they appreciate modern retail, one, for being a place where they can spend social time with family and do so in a space where it's relaxed and pleasant. So it's this thing around how shopping isn't just a chore, but shopping is about a social event, it's about entertainment, and it's something that modern retail is uniquely positioned to provide. The other thing that I think is important not to lose track of is this thing around quality and how consumers appreciate that the brands driving modern retail put a premium on delivering quality to them, and that gives them a clear advantage over some of the more informal markets. So when we put this all together, right, what are our views on what it means for the market and how it's likely to continue to evolve? One, we remain convinced that there's a strong pent-up need for modern retail, and that will continue to spur sustained change. One of the things that we see already is, frankly, a blending between semi-formal and formal, with semi-formal retailers continuing to also push the boundaries on how modern they are, what sort of experience that they are willing to provide to consumers. Because consumers, once they've experienced modern retail, whether it's at a mall, whether it's at a QSR, their expectations shift, and the set of offerings that they expect from where they go also shift. So there's a variety of opportunity for modern retailers, both retailers and property developers, to evolve. We see an incredible amount of opportunity, not just within the grade A mall type of developments, but within strip malls, within neighborhood malls that can make modern retail more accessible to people in the various places in which they live. Second is that affordability will continue to reign supreme. Certainly, there's a segment, SCCAB or LSM 9 and 10, if for the South Africans in the room, for which price sensitivity is maybe not a key driver. But for consumers in SCCC, SCCD, it continues to be a key driver of how they make their purchasing choices. And it's not just about cheap, right? It's around value. It's around where am I sure that I'm going to get value for my spend? So business models, and frankly, even for us, right, we are continuously challenged around how do we deliver better affordability while still delivering a higher standard for our consumers. As already mentioned, entertainment, relaxation, demand continues to be resilient. People are looking for ways in which they can enjoy themselves and they can wind down. And we've seen that spur an exponential growth in what I'll call semi-formal lounges over the last 5 to 10 years. Whether it's the suburbs of Lagos or in Ibadan, there's literally been an explosion of those sort of enterprises as people are looking for ways in which they can relax. Micro SMEs and social media commerce have really become standard fare. You engage with the average Nigerian, and they'll tell you about products they're buying on WhatsApp. They'll tell you about products that they're finding on Instagram and they're connecting with. So for us, when we think about digital commerce, the engagement isn't just about, oh, what is Jumia doing or what is Konga doing, or interestingly enough, AliExpress doing in this context. It's a much broader picture that has a big component in social and has a bigger component in a variety of small MSMEs that are producing truly remarkable products that consumers appreciate. Whether it's beautifully designed slippers, whether it's gourmet yogurt, whether it's homemade delivery meals, there's an explosion in the number of small skilled individuals provided products directly to consumers that they really appreciate. And that's a trend that frankly has become well established. Online for many categories has become normal, whether that's using the e-commerce platforms or social media, as we already had stated. But frankly, as we used to see in the world prior to COVID, the move on grocery is still slow. Consumers still struggle with accepting the value proposition. They find it to be slower. They have concerns around the quality of what they get. They have concerns around the affordability of what they get. So that category we haven't quite seen digitized as quickly as we had anticipated. We launched an online offering in 2020 in response to the pandemic, because we also thought that there might be a sizable and significant shift of grocery online, but frankly, we haven't seen that. The last thing to also highlight is the population in Nigeria is young. There's a lot of Gen Zs, and they think a bit differently than the older demographic. So the challenge for all of us in the space really is, how do you continue to serve the consumers you have today, but also ensure you're building a business that's resilient and ready for those coming tomorrow. So from our standpoint, we have continued to invest through this cycle. This particular chart just shows the set of stores we've opened over the last 5 years, a mix of supermarkets and convenience locations. We believe that the market is still ripe for investment. We have seen our business continue to grow at modest multiples of inflation, and we think that's a trend that can continue into the future. So we are quite deliberate around continuing to grow through the cycle, understanding the realities of the challenges that the market still presents. So thank you.
Ade, thank you very much for those great insights. Yeah, there's a lot of stuff to consider, but it's great that things are changing, and that obviously provides opportunities. So I'm wondering if, just moving on to Derek, whether some of those things resonate, and just to talk a little bit about, you have shopping malls in Lagos, Abuja. Maybe you could just outline just where you are exactly. I know the one in Lekki I've been to, the one in Abuja as well. What are the kind of challenges you're having? I mean, obviously there's a lot of Forex issues that you have to deal with, and also just in terms of your South African clients, sort of main tenants. I know ShopRite has been bought over, so that's, you've not lost them, but certainly the secondary kind of anchor tenants and so on. Just how are you managing that process? And just before Derek talks, I just want to remind you, any questions, just to be thinking about that now. Derek is the last of this round of panelists, and so if you could just just think about that for a minute. Derek, over to you.
Diana, thank you very much. I think, I'm going to share a bit our experiences over the last 18 months with COVID. We also have some shopping malls in other parts of sub-Saharan Africa. So we've experienced, COVID and economic conditions in those markets as well. And I think something to start up with, that's, obviously, all the markets were impacted by COVID. But I think the impact on Nigeria was far less than the other markets that we operate in. Nigeria has also recovered a lot quicker than the other markets that we operate in. I think if we look at going into COVID, as you mentioned, even before COVID, the economic conditions were not that easy. It was challenging. And then COVID started, beginning of last year, that just made it worse. I think the past 18 months has sort of been, two periods. The first 9 months was extremely difficult with lockdowns, where, we had very, very limited, stores open, mainly the grocery stores that were operating, and some chemists. We saw foot traffic, basically going to zero. And as a result of that, we had to give, significant concessions to all our tenants to keep them alive. And that was across the board, that we had to help them to keep them going. And I think it was not, similar in other parts of the world as well. We also, fortunately had to, inject some additional capital. Fortunately, we had, low levels of debt. We had this good relationship with the financial institutions that supported it. So it was very much a team effort. And on top of that, we had to reduce expenses significantly, to make sure that we have positive cash flows. And then, I think came this year, 2021. And I think over the past 9 months, we've seen in Nigeria a significant improvement in operations in the malls and of our retailers. I think something that has been very positive. Nigerians love to travel to other parts of the world and do a lot of their shopping there. So what we've seen is that with people traveling less, people visited the malls. And they shop more in the shopping malls, So some of the shops in our malls, we actually saw where turnovers doubled over the past nine months, just because people were spending more time in the mall and spending more money locally and buying their sneakers in London or Dubai. So that was very positive. We've also seen the occupancy of the malls increased significantly over the 9 months. In all our malls, our occupancy is the highest that it's ever been, which is very positive. In some cases, over 95%. We've also seen the rent billings has increased significantly over the past 9 months. Also, the recoveries of people actually pay is over 90%, which is very positive. And even arrears of previous years has been reducing over the past 9 months. So, yeah, I think from our point of view, it was very difficult. It is still, difficult. We're still not where we were before we actually, started with the projects. But yeah, I think the momentum is very strong. I think inflation obviously had a negative impact on the consumer. We've seen that prices increase significantly. restaurants. And grocery stores and also other stores. The biggest problem for us in Nigeria is the forex, the lack of forex, and also the uncertainty around what the exchange rate is. I think it's not just for us; it's for everyone. Our retailers that need to import some of their materials. It's very challenging. Sometimes there's very limited stock in the stores, which makes it difficult for them to operate. But yeah, hopefully, we've seen that in 2016 and previous, and then the recovery. So yeah, hopefully with the world price and the positive momentum, that will also be something of the past. I think, we've seen a lot of South African retailers leave Nigeria. I think it's not just Nigeria. We've seen them also leave other markets. In other countries, it's even worse than what it is in Nigeria from that perspective. I think Africa as a whole has been challenging. South Africans had our own challenges at home from a retail perspective as well. We were impacted previously in Lagos by the riots in 2019 and 2020. We recovered very quickly, and I think this year we saw even worse riots in SA. I think that had a huge impact on the malls, on the retailers in that market, and trying to recover from that. And I think, from a retail perspective and us, one of the biggest disappointments was at the beginning of last year, we had a planned trip with some of the largest international retailers out of Europe and Turkey to visit West Africa. And these were Carrefour, LC Waikiki, and others. And we actually had booked tickets for them to visit Nigeria. And 2 days before they were supposed to travel, those trips were cancelled. And yeah, they are still planning to come back. But obviously with the restrictions, that hasn't happened, but we believe that that will happen. We've had a number of discussions over the last 2 months with a number of European retailers that is expanding again, that want to enter the market. And I believe that they will enter the market coming next year. And I think that's very positive. And I think Ade mentioned hospitality, healthcare is the growth. I think we as malls, we don't see ourselves as malls just selling things. I think we see ourselves a lot more as hospitality. We've provided a lot of that from the beginning for kids' entertainment, movies, restaurants. Some of our restaurants has actually expanded, opened more restaurants over the past 9 months, and some of them in Nigeria. If you don't make a booking, you wouldn't get in there, you know. So that's very positive. And then very interesting healthcare that we've seen a huge opportunity that's coming out of the pandemic. Now, end of last year, I was approached by one of a large European healthcare provider that wanted to come into our shopping malls to open up. And then, yeah, we found that very interesting. I think globally, you know, a lot of people are looking at what else they can put into shopping centers. And what was interesting is that this healthcare provider said to us that historically 40% of their revenue came from Africa, from Africans travel to Europe for their healthcare. And as a result of the pandemic and restrictions on travel, they basically lost 40% of their revenue over the past 12 months. That had a huge impact on them. And they decided to counter that is that they want to move into clinics into the rest of Africa to come closer to their patients or customers. So we've been in discussions with them for taking up between 1,000 and 1,500 square meters in our shopping malls. We've actually just signed our first healthcare clinic in our Mozambique shopping mall that will open up 500 square meters up there. And that's something that we are very excited about, and that we see a big opportunity for us as more operators. So I think overall, you know, Nigeria is a huge market. I think that came through clearly today, with everyone mentioning that. And from a consumer, yes, it has been some challenges, but yeah, the recovery was, you know, has been quick. And yeah, I think there is going to be, you know, a good future for retail and for shopping malls in the Nigerian market. Yeah, thank you very much, Diana.
Great, thanks, Derek. There's a lot of insights you've given us there and shared. Interesting about the clinic. I think that having a clinic in a shopping mall, it's something, I guess we're all thinking a bit more laterally than we were before COVID. So that's a really interesting development. And I'm also interested to hear that your tenant occupancy is so high. Do you want to just say, I mean, what kind of tenant mix? Are you seeing local chains coming into the shopping malls more, or where are they coming from?
Yes, I think, Diana, over the last 12 months, a lot of the growth has been from local operators. They've grown aggressively, and I think they know the market, obviously very, very well. And so most of the growth, we have seen some international people coming in out of Turkey that still expanded and opened up our malls, but I would say that most of that has come from locals.
Great, thank you very much. PRENITA, Fola, we haven't given you a chance to say anything. I don't know if you want to comment on how you see things going forward in terms of the feedback from your clients, or PRENITA, if you would like to comment on that as well. What you're seeing, sort of looking forward to 2022. Fola, are you there? Or PRENITA? Okay, well, I'll start with Fola.
Hi. It's still despite all the promise that the consumer market holds, it's still a challenging environment, as everyone has pointed out. But for the listed companies in particular, the challenge for them is compensating for that high inflationary environment. We've seen situations where they've increased prices. However, the market share has become something to consider. So it will be challenging in the next few months for them, because when they increase prices, continuing to grow market share then becomes a challenge, and continuing to retain customers will also be challenging. But the good thing is that some of the constraints that they are facing, like the supply chain bottlenecks, are transitory. And once these start to ease, what we would see is that pricing that pricing change that has taken place over the last few months, we would see that translating into better margins for them. We've seen the brewers, for instance, if I could use the brewers as a case in point, the products they sell are more discretionary. And the fact that disposable incomes continue to fall and have been exacerbated by the pandemic. So what's happened is that every one of them have to now be innovative. So things like smaller pack sizes, things like trying to offer products, that would appeal to different categories of consumers at affordable rates, have been things that, they have had to consider. But then pricing has become very sensitive in that market, because the more you increase prices, the more the consumer tends to downtrade towards, other cheaper items, like the cheap or affordable lagers. And, that space is not as encouraging as other spaces. And that's because the margins there are not that attractive. So what you would see is that the non-affordable lager segment is the highest in terms of volumes. It's the highest contributor to the beer market. However, the margins in that space are not really attractive. And what the brewers are doing is they are trying to expand in the non-lager segments where the margins are more attractive. But then the affordability is one key consideration. So essentially, if you look at the whole consumer environment, yes, they have been able to increase prices. Yes, the market is still attractive because you have a situation where the consumers' disposable incomes are growing from a low base. But in the near term, it's going to be tough to continue to sustain growth driven by prices. And what we are looking forward to is a situation or a government that can push through reforms that would improve the economic well-being of the consumer. We are not seeing that yet. We're seeing oil prices being attractive, but then production levels are not strong enough to actually boost government revenues that would ultimately increase spending. And so
Right, thanks.
it's going to be tough. Yeah.
Thanks. Sorry, I'm going to have to interrupt you there because I see we're very fast running out of time. So I just wanted to actually give the last word. I see there's just a question from Liz, White House from Africa House. Derek, did you mention the name of the company developing the clinics in the shopping center? I think if you didn't, there's a good reason for that.
No, I didn't, Diana. Yeah, so no, unfortunately I can't, but yeah.
Okay, well, I'm sure we'll find out in due course. Let's
Yes.
travel to Maputo and I'm sure you can find them. Okay, so I'm going to give the last word to Ade, just to talk about, Follow is just talking quite a lot about price. Of course, it is a hugely sensitive thing, which is why I think there's huge competition from the informal sector, informal market, smuggling, all of those kind of things in Nigeria. How do you manage this? How do you hold the tide against this reversion to cheaper goods in the markets, in the informal markets?
Great question, Diane, and a complex question. I think that the first thing to always remember around price in this market or any market is the sensitivity to price first of all, is driven by two things. One, obviously, is income, right? The level of wealth of the individual. But second is also the attitudinal tendencies of the individual. Anytime you do any sort of attitudinal segmentation like we've done in this market here, I did previously at McKinsey, you will find there's some group of consumers who are just highly price sensitive. It's just their nature, their personality, this is how they think. There's some that are just more brand oriented. There's some that are more oriented around convenience. And each of those groups think differently. So the great thing as a retailer, a manufacturer, one is there's already some inbuilt segments for whom price is not the first consideration, right? So that already helps, right, in balancing the set of consumers we have to deal with. The second thing that's helpful is the way consumers think around the interaction between price, quality, and product uniqueness varies dramatically by category. If I take the example of fresh produce, for example, right, there the price sensitivity is incredibly high because as far as they're concerned, it's a complete commodity. It's a plantain, it's a yam, it's chicken, and the price is kind of the price, right? There's not a lot of room to play. But where we then see in categories where we can talk about better differentiation of our products, whether it's places where it's products we produce like bread or like chicken pie or like rice, we and other players in that space get more liberty in terms of pricing. The third category where we see quite some room is in things like personal care products, where because there's a lot of fake products in the open market, you get a little bit of breathing room because people not everyone, but several of the consumers understand, look, I can't be sure of the quality of what I'm getting in the open market. So sure, here it might cost a bit more, but I know what I'm getting. So that's why I say the answer to your question is complex. It's all of these variables that come into play in different categories, in different product groups that help inform our approach on how we manage the price sensitivity with the consumers.
Great, thank you. Yeah, that's probably a whole discussion all by itself. But unfortunately, we don't have any time left for that. But it's been a great discussion, I must say. I found it really interesting, and I think hopefully there's a lot of insights there for people out there. So I just want to thank our panel. Ade, Prenita, Derek, and Fola, thanks for stepping in. And we missed Olu, but there we go. I also want to just thank Nwetu, working behind the scenes for the chamber on this event, and to all the delegates, and also to our members who are with us today for supporting us and enabling us to continue our work. Our members do include, of course, Standard Bank and Navarre Equity Partners. Ade, no pressure. All right, so I just want to say thanks everybody, and I hope you all enjoyed it, and I hope you will join us for our next event. I'm not sure what it is yet. We're running into the year end very quickly, but we will have a regular suite of events for next year lined up as well. So we hope you'll keep posted. And if you're interested in the chamber, please have a look at our website. We would love more members. We exist because of our members. So we can't play a role unless we are supported. So that would be great. So thank you very much, everybody. I'm going to close the session, and thanks again to the panelists.
Thanks.
It's been a great discussion.
Thanks, Diana. Thanks, everyone.
Thanks, everyone.
Thank you, everyone.